Quantum computing is no longer just sci-fi, it's real whether you like it or not. It's here and it's going to be all over this next decade. It could completely reshape industries like cybersecurity, pharmaceuticals, finance and AI. So in this video, I'm going to be going over 3 quantum stocks with potential generational wealth in the making. I'm going to be talking about small caps with moonshot potential and giants with billions in their backing. So let's get straight into this video. Before I dive into the stocks, let me quickly explain why quantum computing is such a big deal and how it actually works in basic terms. Right now, the computers we use, even the most powerful supercomputers, operate on binary. Everything is either a 1 or a 0. But quantum computers use qubits, and these qubits are either a 1, 0, or both at the same time. That is called superposition, and this allows quantum computers to run millions of calculations simultaneously. And now, to add a layer of confusion, we add entanglement, where qubits are linked together so the state of one instantly affects the other, and suddenly you've got a machine that can solve problems that would normally take a normal computer thousands of years, and this can be processed in just minutes. So what are the applications of this? Well, we're talking breaking modern encryption, designing new materials and drugs, optimizing global supply chains, revolutionizing artificial intelligence. Quantum could change everything. And this is why companies, governments, and venture capitalists are pouring billions into this tech sector right now. And if you are early, you could be in the same position as the investors who got into Nvidia, Apple, Amazon decades ago. So what are my top 3 quantum computing stocks with generational wealth potential? Well, if you are looking for a pure quantum play stock, then IONQ is certainly the leader. IONQ already offer cloud-accessible quantum computers through Amazon, Google, and Microsoft, and they're building on trapped ion technology, which is considered more stable and scalable than what most of the other competitors are doing. And what is crazy about this stock is they are projected $100 million in revenue by 2026 from virtually zero today, and their long-term plan involves a 64K qubit system. This is equivalent to essentially buying Nvidia back when it was just making graphics chips. A big risk, but also a big reward. So doing a brief analysis on where this stock currently is and where it could potentially head in the next 12 months. Here on TradingView, we can see what the analysts suggest. So there is an average near 7% upside for this year, and the maximum is coming in at a near 24% upside, with the downside coming in at 25%. It's fair to say that this stock looks to be in a bit of a limbo at the moment. There's not really much suggesting where this will head from here. We have seen this absolutely rally up since the 10th of March this year, and since then it's just been going pretty much parabolic. But it's fair to say this momentum has definitely come to somewhat of an end, and I think it's relying on some positive news to really push this up. Looking at the exponential moving averages here, we can see that this stock is currently well above all of them, with it also being in a golden cross situation, indicating that the momentum is well and truly underneath this stock. At the moment, this essentially is where the 50-day EMA crosses over and above the 100-day EMA. So it looks to be as if this stock does actually have a relatively strong level of support right now, but it is definitely looking to be weak in the knees at its current price. If we do look into their financials though, we can see that on their free cash flow, this stock is relatively consistently negative and only getting worse, which is really not what you want to see. But of course, this company is developing a lot within their R&D sectors. If we do look at their liquidity here, this is coming in at around 340 relative to their debt, which is at 17, indicating that they actually don't have that much debt. They are most likely paying this all of their expenditures off with their free cash flow. And looking at their revenue here, we can see that they have actually now broken positive in the revenue consistently for the last couple of years. But when we do actually look at their profit, then we can see that this is also consistently negative and also getting worse. Furthermore, this company is consistently missing on its earnings estimates, but the next 12 months, this company is actually projected to only decline in its growth sales. So you might be thinking, wow, why are you suggesting IONQ then? Well, it's just for the long-term play. This stock looks to have a massive upside in the long run. For right now, I don't really see how this stock can be that sustainable at this price. So for me, I would wait to see this pull back slightly before I entered a position. But if you are in INQ, then I suggest holding it for the next couple of decades, because this could absolutely generate some generational wealth for you and, of course, your family. Next up is IBM, a company that has been quietly making massive progress within quantum, whilst most investors still think of it as an old school tech stock. Here's the thing though, IBM is actually leading the global race in enterprise quantum computing. They've built some of the most powerful quantum systems to date, including the 1121 qubit Condor processor released in late 2023, and they've given access to these systems through the IBM Quantum Scheme, which over 250 Fortune 500 companies, governments, and research institutions are using. Unlike the small startups that are still years away from commercialization, IBM already generates quantum computing revenue and is building real-world tools. They are also rolling out Quantum System 2, a modular, scalable platform that is the quantum computing version of a data center. So I know what you're thinking, IBM isn't really a 10 times moonshot like IonQ, but that is really the point. It's a stable cash flow tech giant with massive upside if quantum scales. So if you want a safer, lower risk entry into this world, IBM gives you quantum exposure with enterprise grade backing. So quickly doing a brief analysis on IBM, this stock is currently at a PE of near 50. It's got a forward PE of in the late 20s at 25.64, indicating that there is still room for this stock to run. But when we do actually look at what the analysts suggest for this stock, we can see that they think this stock looks to be overvalued currently, which when you pull in their forward PE, it does beg the question, why are the analysts putting this in at overvalued currently? For me, I do not agree with that. But when we do actually factor in their growth for the next 12 months, we can see that this is only down at 6.5%. So maybe that is where they are getting this growth trajectory from. But again, this isn't a momentum video. If you are interested in momentum videos, then do consider liking and subscribing to this channel, because that is essentially my bread and butter. This is a long-term video, a long-term hold if quantum really does scale up. And not to spoil it for you, I'm not a time traveler, but I can really see quantum exploding over the next couple of decades as the applications become more widely known. Right now, we're not really too sure where this technology will be used. Of course, healthcare will be a massive one, finance will be massive, and artificial intelligence will also be up there. But the real world applications of you having a quantum computer on your desk, it's not that realistic. That's not what the application is really intended for. But in the future, there is definitely a consumer independency within the quantum world. And finally, the silent giant in this space is Google, or more specifically Alphabet. Back in 2019, Google made headlines claiming they'd achieved quantum supremacy with their Sycamore processor. While that claimed to be a controversial move for Google, what was not controversial is Google is investing hundreds of millions into quantum. They've got the infrastructure, the cloud network, and the AI dominance, and if they suddenly shift resources into scaling quantum, they could leapfrog the competition overnight. So if you want exposure to quantum without the same volatility, Google is definitely a must own. Google is an amazing pick because of the diversification. In my opinion, this is one of, if not the best companies in the world. Of course, they are currently going through issues with the antitrust, especially with the EU recently fining them billions of dollars. So we have obviously seen this stock fall massively, but if you do want to stay away from pure quantum plays and just have a little finger in it, and when I say little, it's almost a whole fist, it's fair to say that Google could definitely be that stock. With the majority of Google's revenue coming through advertisements, it's fair to say that the actual running costs of Google is really not that high, so their money can really be poured into scaling and investing in AI and quantum computing, which is just going to be massive plays for the future. Google has now just closed just below all of their EMAs, suggesting that this stock could certainly fall from here. But realistically, I do struggle to see it opening up and falling further in the next coming weeks. I do think this is a perfect buying opportunity for Google. Now, of course, there is also the risk of the antitrust. This could certainly send Google falling down. But in my opinion, who is really going to be able to buy Google Chrome who doesn't already have some sort of a monopoly? So it's fair to say I think Google should be relatively safe. But back to the matter at hand of quantum, I think it's fair to say that Google could definitely see a massive upside. It's very similar to Microsoft in the sense that they have their own quantum schemes, and of course the money they can pour into this will be fundamental to their success within this field. So they are my top 3 stock picks. They're all very independently different from each other. You've got the diversification of Google, you've got the risk of IONQ, and then you've got the middle ground of IBM. So it's fair to say each of these stocks have their own benefits and obviously negatives. So it's for you to decide where exactly you should be putting your money, as I am not a financial advisor and none of this has been financial advice. So I hope you have enjoyed this video. Please join the empire. Hit a subscribe. It would be really nice to see you around here. And with that being said, I will see you for the next video.